You're watching Dukascopy TV. I'm Elaine Stenson and I'm joined in the studio now by independent market strategist Bruno Estier. He's here with me now to look at the technical aspects of the market. Bruno, you mentioned that in July some of the European equity index was outperforming the US equity index market on the way up. Is this still valid on the way down?
Well, good morning, Elaine. Yes, it is valid. But we have to look at the past history to realize what's happening. If we have here on this chart, on the top part, the chart of the Euro Stoxx since 1998, and on a monthly close basis. And we have in the middle a ratio comparing the Euro Stoxx index compared to the S&P. And we notice that when the ratio is moving down, it's also at a time when Euro Stoxx is moving down. And when the ratio is moving up, outperformance of the Euro Stoxx, it means it's often happened when the Euro Stoxx is moving up. And so it's so-called high beta of the S&P. In other words, it's overshoot on the upside, it's overshoot also on the downside. Now things are a bit changing. If we watch carefully what's happening between 2012 and 2013 on these monthly charts, what we notice is that the long underperformance of the Euro Stoxx versus the S&P is starting to bottom out. That means it doesn't go down as it used to do in the past. First, in July to December of last year, in 2012, during the rebound of the market, of the Euro Stoxx market, it outperformed the S&P 500. And very recently, in July, and we're going to see that on the next chart, it's possible.
Bruno, is the situation also favourable on the medium term on a weekly chart?
Well, medium term or short term, of course, when we start with a monthly chart, we need to go to the weekly charts. And what we have been looking at on the last 4 years is the movement down of this Euro Stoxx, and we say this bottom. We had the first bottom here last year, as we saw before, and now the new bottom recently, and in July, this rise that we mentioned in past interviews.
Bruno, do the daily charts also suggest what you have to do?
Well, the daily charts, of course, helps you create a setup to trade or to enter the market. In that case, it would be to consider favoring Euro Stoxx indices compared to the S&P 500. As we noticed, it moved up in July and it pulled back a little bit in the last 2 weeks when the market was correcting also since August 5th. And of course, it allows what we say to organize a trade setup. That means if you are, for example, buyer of Euro Stoxx versus S&P, okay, you are probably buying Euro Stoxx and selling S&P, you are doing that, you have to determine a stop loss, which is going to be at the low levels, that the recent low, and you expect, of course, a reward which is going to be as much as the recent move that we had in July, bringing you somewhere close to the top we had on 2013. And this setup tells you now to wait a little bit for a little bit of underperformance to enter the trade.
Is there not a risk that these declining trends will keep on going down lower?
Well, you are mentioning, in fact, the trend is your friend, right? You are saying that because it has moved down, it could make a new low here. And there is some risk, and if we take a longer term perspective, for example, we're going to look here at the US market outperforming on a very long term basis since 1949 the EFA market, the East European and Asiatic market, so everything which is not American. And we noticed that since 2007 and recently the US market has been outperforming. Okay, if it is outperforming, then Europe should not be able to do so well. And of course, here, when we take this long-term perspective, what we have is something in a trading range around the mean, which is here in red, and we hope that it's going to return to the mean. but there is no confirmation yet that this has happened. That's why we have still a risk present.
And is this approach similar for emerging markets?
Yes, it can be. If, for example, we look at the performance of US market relative to emerging market, we noticed that only recently, since the beginning of 2012, the US market is outperforming emerging market. Before, emerging markets were doing very well and much better than the US market. So that would mean that there is a lot of outperformance of the US market versus the emerging market. And if we looked at the last chart, that would give us a little hint that we should be careful, because the emerging market here in orange and in black, the currency of these emerging markets are close to their previous support or floor level. There is no guarantee that they cannot go through them, just because of the previous chart showing that the US market is just initiating an outperformance against emerging market, and that could continue for a while.
Bruno, thank you very much for joining us today.
You're welcome.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.